Hello, and I'm Henil Shah, and I welcome you all to today's session. This is the third episode of Market Roundup, and I guess a lot of people have joined, and so we can begin this session. We have two experts. Fundamental expert is Sharan Srinivasa, and our technical expert is Karan Bhojwani, and they would be giving you all market insights. And at the end of this thing, we will be taking your questions up. And I would request you all to kindly post your questions in the Q&A section of the chat box so that we can pick it up, and our experts will answer those questions. So without further ado, we can just start our session. I would request Sharon to start this session.
Yeah, good evening, everyone. Welcome to this monthly webinar, which we have for, for subscribers as well as those who are interested to know more about DSIJ's views on markets itself. Let me begin here. So obviously, this is pretty clear for anyone who follows markets. It was probably a pretty volatile and tumultuous month in February. While we started the month on a optimistic note with the budget as well as the RBI policy towards around, let's say, the 20th of February, there was obviously more volatility, which began on expectations of the outbreak of conflict, between Russia and Ukraine. Obviously, the sell-off, started towards the end of the month. Yeah, so all sectors were down for the month. I mean, across the board, be it banking, be it even IT, or other sectors such as even pharma or FMCG. I think only metals initially held up a little better. I'll kind of come to that point a little bit in a minute or so. But for the month overall, all sectors were down. Yeah, so we wrapped up the earnings for the December quarter also, which was reasonably good. Of course, the only negative was that some manufacturing companies reported continued margin pressure because of obviously higher input raw material costs, which impacted their earnings growth on a year-over-year as well as quarter-on-quarter basis. Yeah. And also in terms of the economic data, things remained positive for the month of February, because obviously, the economy continued to come back, especially the services sector after the January, localized restrictions which were there for, those contact services because of the Omicron variant. Yeah, so obviously the data also improved in the month of February. Now, moving on to where we are placed, we are 7 days into the month, and obviously, this issue with Ukraine has resulted in a larger conflict. Initially, people were expecting that it would be a limited conflict, might be maximum 1 week or something, because even as you know, the Russian President Vladimir Putin said that it was just a special operation to, to remove the, the government in place in Kiev in Ukraine. But unfortunately, it's not been like that. It's obviously worsened further, obviously, and its fighting has intensified into the month of March. Yeah. So what has been obvious is that all sectors have been impacted, some more than others so far in the month of March. With the only relatively positive sector being IT, which has held up a little bit better because of its defensive position as a result of the weakening rupee. Yeah, because the rupee has obviously come under pressure due to the large increase in the price of crude oil. So obviously, the IT sector, which earns all of its revenues in foreign currency is obviously likely to benefit from this particular phenomenon of a weakening rupee. So in the next few weeks, I think obviously inflation will take center stage. Obviously, I think there's an announcement obviously that's due in terms of the petrol and diesel price hike, which will come out probably after the polling is done, right? The counting rather is done today. We have ended obviously the polling for the state elections. UP state elections have completed today, and it's likely that petrol prices. So it's key to understand, I guess, how the government is going to manage this issue, because they cannot pass along. If they have to pass along all of the increase in the crude price to the consumer, it's going to be a very large hike, because I think today crude oil closed well above $120 a barrel and such. So obviously that's a pretty large increase from 2 weeks ago. So the government will have to be judicious in terms of how they manage this, because obviously inflation will get impacted. They can't completely avoid it. This is not under the control of the government, obviously, and India is a large importer of crude oil, so nothing can be done about that. But hopefully they can maybe use a combination of excise duty cuts as well as price hikes to manage the situation, at least in the short term. Yeah. So going forward, we expect markets to remain volatile and under pressure. Of course, I think my colleague Karan will talk about how the technicals of the market are placed, because obviously the technicals are important in a sense, because obviously on the fundamental side there has been very active selling by the FIIs, and at some point we expect this to abate, but we don't know exactly when. Yeah. Of course, given all this, we believe that that and our monthly newsletter has also pointed that out, that this is a good time to actively slowly increase allocations to equity from a 3 year plus kind of perspective, because it is an opportunity. While markets might fall a little still further and such, it's a good time to be investing, right? But as most market commentators are telling people to wait and hold, but we don't think you should wait to make your complete commitment. So let's say if you have some money, we would advise you to invest in stages. Maybe invest 25% now, and then wait for an assessment of how things play out in the next week or two, then add 25% more, and so on and so forth. Yeah. So that's our thinking on this in terms of the fundamental side. I'll now hand it over to Karan for his analysis from the technical basis. Over to you, Karan.
Thank you, Sharan sir. So good evening, everyone. Myself, Karan Bhojwani, and I'm looking after the technical research part at DSIJ. Today, the Nifty witnessed a fall of over 2%. As a result, it has broken its important psychological level of 16,000. On an intraday basis, it made a low of 15,711. However, in the last leg of trade, Nifty managed to recover nearly 150 points from the day's low. As a result, the closing price was almost similar to the opening level. So this led to the formation of candlestick pattern which resembles to a doji. However, after today's session, the million-dollar question among the market participants is that, has the market formed a short-term bottom, or there is still room for the market to go lower? We will try to get this answer with the help of charts. So we will now move to the charts, and we will explore what are the charts suggesting at this point of time. So I'm sharing my screen. I hope the chart is visible to everyone. So this is the daily chart of Nifty. We saw that Nifty made a high of 18,350.95 in the month of January, and it formed a bearish engulfing pattern right at the swing highs. Thereafter, we witnessed a market correction of nearly 8.5% of correction from this high, this calendar year high, to this low. So this 8.5% correction led to the pullback. The pullback was halted near the 61.8 percentage of this correction, this leg of correction. So after the halting at the 61.8% level, Nifty formed a series of higher low. You can check it out. This is the higher swing led by this swing high, which is lower than the earlier swing high, and this is the third swing high, which is lower than this swing high. So this led to the formation of declining trend line. This is the declining trend line. We see that this high is followed by a lower high, and this high is followed by another lower high. Along with that, we saw there is a formation of equitated lows. Equitated lows means the lows are almost of equal level on the downside. So if we plot a trend line, we get a horizontal trend line on the downside. And if you can see this pattern, this whole complete structure has resulted into the formation of descending triangle pattern, which is a bearish continuation pattern. And this pattern resolved on the downside. As we can see on 24th February, this pattern was broken down. Now the question is that we need to check whether this pattern has achieved this target or not. The thumb rule to check the target of this pattern is to measure the width of this pattern. So if we can measure the width of this pattern, the width of this pattern is around about 5.5%. You can see it 5.69% to be precise. So we will check whether this pattern target has been achieved or not. So this was the breakdown level, and this today's low was the lowest point of this thing. So the pattern has already achieved its target. So the down from after the breakdown of this pattern was 6.53%. So we can see the pattern has achieved this target, and moreover, what is quite important to see over there is the formation of doji pattern. This formation of doji pattern, along with the pattern achieving its target, bearish pattern achieving its target, suggests that we can see a reversal, given the fact that this low has been held 15,711. And supporting our view of this, that we have formed a short-term bottom over here, is the fact that on the weekly chart, if you can see the impulse move of the Nifty, which began from the August first week, has started from 15,800 level. So considering this, we see that 15,700 to 15,800 is a very crucial level in the short to near term. There is one more interesting observation, which is on the India VIX chart, which is also known as the fear index, is that the India VIX chart witnessed a breakout of bullish ascending triangle pattern just before the breakdown of bearish descending triangle pattern on the Nifty daily chart. And after that, it has also met the target of its pattern, which is ascending triangle pattern. If you can check the width of this ascending triangle pattern, it's of 42%. So here you can check it is of 42%. And from breakout level, you can check if India VIX has already achieved this target of 42%. So this target has been achieved. So our view is that we have almost formed a temporary bottom, given the fact that 15,700 is held on the closing level basis. Thank you. This was from my side.
Thank you, Karan, and as well as thank you, Sharon, for providing such a wonderful market insight for our attendees. Now let's move on to the question and answer session, and we have received quite a lot of questions, and most of them are regarding sectors. So which sector should one invest in right now from the long-term perspective, and most probably even the stocks they can add from those sectors? So this would be very much be able to answer by Sharon. So Sharon, I would request you to kindly answer this question.
Sure. So we believe that all the economically sensitive sectors should be considered from a long-term investment perspective. Sectors such as banking, obviously it has been hit one of the worst, obviously, in the sell-off. The concern is obviously how much the interest rates might have to rise to combat the inflation, but we don't think that inflation will rise very rapidly. Currently, most of it, and if you see the stocks which have been most bought by FIs are the ones which have been sold the most, things like HDFC Bank. We prefer economy facing sectors such as banking, looking at capital goods, because we think that the budget announcements on February 1st will continue to be supportive. We think that awards for whatever capex by the central and state governments will remain in place. So capital goods is also an interesting sector to consider for investing. And of course, I'm sure some of our audience has already heard about all the activity in the metal space. I mean, metal stocks have rallied heavily simply because Russia is a supplier in some of these key commodities, and it is going to have an impact on the demand supply situation. So maybe you can hold some commodities in the portfolios in the form of metal stocks.
Thank you, Sharon. And even the next question is for you. He's asking, the stock recommended by DSIJ value pick are corrected badly India Mart. Like he said some examples like India Mart, Metropolis. So are they a good stocks for bottom fishing?
Yeah,
And
so India Mart, thanks. So actually, India Mart Mesh, we think you should kind of maybe wait a little bit more, because it's an e-commerce play, which is obviously likely to be continue to maybe receive a bit of pressure in the short term, because as the price earnings multiple derates because of higher interest rates and such. But certainly, Metropolis Labs, we think is a company with which is a good time to consider doing some bottom fishing in.
Thank you, Sharon. And the next question is for you, Karan. He is asking your thoughts about Jubilant Food and OFSs.
Wait a second, I will check. So if I'm checking the daily chart of Jubilant Food, it has formed a hammer pattern on the daily chart, and on the weekly chart it is lying near about a very crucial support area. So this 2400 to 2580 is a very good crucial support area. So I think one can start accumulating for a, let's say, 6 to 8 months time horizon around this level, because the risk reward opportunity is quite favorable at current levels for Jubilant Food. And talking about OFS, again, OFS is again holding on the very good support area on the weekly chart. 30 to 50 is a very good support for OFSs on the weekly chart. So I think if any dip is seen in the stock till 30 to 50, one can start accumulating over there.
Thank you, Karan. And the next question is for you, Sharon. He's asking, do we see March 2020 like fall again?
The thing is that you can never obviously completely rule out these things from from the market standpoint. No one can predict markets in the short term. But that is why what we are saying is that you need to accumulate steadily, because what happened in March 2020, so February 2020 is when the sell-off began, right? And And initially, investors, were hesitant, obviously, and then it continued to worsen, into March and such. But actually, when most market experts were saying don't invest in the market actually bottomed, right? So it's very difficult to actually predict if we are going to have a March 2020 kind of situation again. It all depends, and this is again, so it depends on how bad the price of oil moves in the next few weeks, right? If it goes to, let's say, 150, 160, or even $200, that will obviously really cause a lot of pressure in the market. Right now, we are not expecting that kind of price move. But you can never say, you can never be 100% right on markets. That's why what we say is don't think about, whether it could be like March 2020. Think about the long term and put some money, maybe 25% of your investable capital, only long term, to work at this time. If it falls another few percent, you can put another 25%, and so on and so forth. Typically, historically speaking, when it comes to wars, it's been shown, and the only template we have in terms of the crude oil price spike is actually very, very from quite a long time ago. This was March 2003 when the conflict of Iraq War 2 happened, right? And oil prices, I don't remember the exact numbers of the oil prices, but oil prices again went up 20-30% literally in a few days. So whoever bought then, it continued to kind of stay in a range and bottom out in March, April. But that was the bottom in March 2003. You took some time to make money, to earn some money, to earn a return, because markets won't immediately recover by 10-15%, right? It will obviously stabilize and likely establish a range, and probably Karan might throw some more light on that. But that is our view. So invest with a long-term perspective and invest in stages.
Yeah, thank you, Sharon. I guess Karan would like to throw some light on it.
See, basically, in the current environment, what we have seen, the index has only corrected about 15% from the higher levels, which we were seeing in the month of October 2021. However, if we check the number of stocks which are trading below 200-day DMA, which is a very good long-term support, they are indicating that most of the 70 to 85% of the stocks are trading below their 200-day DMA. So it is that this index has not seen a bear correction yet, but many stocks has already seen the bear correction. So as pointed out by Mr. Sharan, we should start investing in a nimble way, and we should not predict the bottom because no one catches the bottom, right? So we should be prepared, and we should follow proper risk management rules and start investing 20-25% as per the risk appetite, and we can get at good levels at current point of time.
Thank you, Karan. The next question is for you, Sharon. He wants to invest in AMC. So, which AMC is good to hold for 20 years time frame?
Okay. So we are not very. So there are only a few listed AMCs, right? So we have HDFC AMC, UTI, and of course the Nippon AMC. So obviously from that aspect, we think that the AMC industry is likely to undergo continued pressure on margins. I mean, given a choice between them, I think HDFC AMC has corrected a fair bit. It is obviously the leader, but its market share continues to get eroded. So from trying to predict, obviously things like 20 years and all is very difficult in the markets. But when we look at a 5-year kind of time frame or something like that, HDFC AMC might be a suitable company to consider investing in.
Thank you, Sharon. The next question is for you, Karan. What are the prospects of the IDFC First Bank and KPIT Technologies?
IDFC First Bank. So on the daily chart, there is an interesting observation on IDFC First Bank chart that IDFC First Bank made a panic low of 38.90 on 24th February. And if we see, despite the sharp correction in the bank nifty and the financial sector from the last 3, 4, 5 trading sessions, it has managed to hold that swing low of 24th February, and today it has formed an hammer kind of pattern on the daily charts. And moreover, we see multiple support area in the zone of 39 to 40 levels. So it is a if someone is invested, I would suggest to keep a stop loss of 37.50 on a closing basis. And if someone wants to invest at current levels, definitely this is a good zone to get in for IDFC First Bank. Regarding KPIT Tech, KPIT Tech is just trading near about its 100-day moving averages, and we have seen in the past that 100-day DMA is acting as a very good support for this stock. And I think any dip towards 510, 515, one can start accumulating KPIT Tech also. So this is my view on both the stocks.
Thank you, Karan. The next question is for you, Sharan. He is asking that in the view of elections getting over today, petrol or diesel hike is expected and can trigger Nifty to create further lower level. Also, with results of state assemblies on 10th, shall also affect the sentiments. Any weak numbers by BJP may further impact the weakened market. Do we wait and watch to be on the safer side?
So I think in terms of the petrol price hike, fuel price hike, people are anyway anticipating a hike. Question is the quantum of the hike. We'll have to kind of wait and see. Again, as I said, these are all difficult decisions given the fact that. But you have to always understand that the markets typically try to discount these announcements. Yeah, so the market is already. That's why it's trading down so much in the last few weeks. It's already discounting that fuel prices will go up and inflation will also increase. Yeah. So from that perspective, we definitely think it is worth to make a staged investment, maybe like I was mentioning earlier, and Karan also confirmed that maybe 20-25% of the investment capital. Now, in terms of the election results, yeah, there could be a knee-jerk reaction if BJP does not come back to power. Especially Uttar Pradesh is pretty important for BJP, especially from the union elections standpoint, which is still 2 years away. So that is important. But we would definitely say you can. Put some money to work, and you see, again, in the long term these things don't matter as much because the country's economic progress will continue as such, right? And we think that the economic recovery which started last year should continue, albeit at a slower pace this year. So from that perspective, while there might be some further selling pressure if the BJP were to receive a setback in the state elections, we think the markets will be able to look through this and come out on top. So again, put 20-25% of your capital to work right away.
Thank you, Sharon. The next question as well is for you. He wants to know your thoughts about cement sector.
So cement we are generally positive on. Again, a lot of the companies are having problems in the December quarter because the rains were unusually heavy in November. It was unseasonally heavy, in the month of November. As a result, the quarterly volume dispatches of some cement players were negatively impacted. And also, they are also continuing to face raw material cost escalation and such. But we think again from a 3-year perspective or something like that, it is a good sector to invest in because it is part of the capital goods sector and is an important sector from a economic recovery. So we generally like select cement stocks.
Thank you, Sharon. The next question is for you, Karan. He wants to know your views on Bajaj Auto and Avanti Feet.
Bajaj Auto and Avanti Foods. Yeah. So the long-term support for Bajaj Auto is around 33,050 rupees, and currently Bajaj Auto is trading around 30 to 30 rupees. So I think if someone is holding for this as a long-term, 33,050 is a very good level to keep as a stop loss. Below this level, I think it can see a good fall from there because it is a major support level. Talking about Avanti Feeds, technically, Avanti Feeds is not looking attractive at given point of time, given the fact we have seen a quite a good sell-off, and it has been forming a sequence of lower high and lower low on the weekly plus as well as on the daily chart, and moreover, it is trading below its important crucial moving averages like 50 DMA and 100 DMA. So I would suggest to wait for some time and wait for some confirmation of bottom formation on Avanti feed before investing in this stock. This was from my side.
Thank you, Karan. Even the next question is for you. We have actually two questions. One is when the 18,000 level be reached, and the other is he wants to know your views on Infosys and L&T.
Infosys and L&T. Okay. So the first question answer is regarding 18,000 level on Nifty. So right now we need to go step by step because we have seen a good severe fall in the index from the last couple of weeks. So the first crucial important level which Nifty needs to hold about is 16,400 mark. If we manage to go and sustain above 16,400 mark on the weekly chart, I think the first target from there would be 17,100. Thereafter only we can assess whether it has potential to go up to 18,000 or not because sector composition which is more uh, means more participation of banking would be needed. If banking is supportive during that period of time, I think at that time we can reassess and we can reassess whether it is possible to hit 18,000 or not. But as of now, 16,400 is a very crucial level to watch out. If we sustain about that level, we can see 17,100 in 2 or 3 months time frame. And regarding Infosys, so Infosys recently tested its long-term moving average, which is 200-day DMA, and thereafter it has been moving higher. And today it made an attempt to break out of the channel pattern, and the channel pattern target is of nearly 100 rupees. So once it starts to sustain about 1750 level, we can expect 1830, 1850 levels in the coming months. And regarding L&T, I think 1580 level is a very good support level for L&T. One can look at these levels when L&T is available for investment purpose. This is from my side.
Thank you, Karan. The next question is for you, Sharan. Among specialty chemical space, he wants to know your views on Acrylamines and Aarti Industries.
Yeah, so we actually have a buy recommendation on both in in our products. Obviously, they have also corrected in the sell off. But again, it is a structural growth play wherein the size of the business is likely to expand significantly in the coming years. So we like both from a 5-year investing perspective, long term.
Thank you, Sharan. Even the next question is for you. He wants to know your view on IT sector, whether the growth momentum will continue for another 2 years at least in the IT sector.
So we think that the growth might be there for another anywhere between 12 and 36 months. I mean, in terms of course, the the pace of growth might slow down in 2023 simply because the US central bank is also hiking interest rates, and this is likely to impact the economy in only 2023, not in 2022. So we definitely think probably till middle of 23 the growth outlook should be reasonably good, and beyond that it might start to reduce in terms of the pace of the growth. So that is our thinking.
Thank you, Sharon. The next question is for you, Karan. Are index ETFs good to buy currently? That is Nifty 50 and or Bank Nifty.
As we have given the view on Nifty that if we are able to hold 15,700 levels, we can say that we have found the short-term bottom. If the perspective is for short-term, then definitely we can start investing 20 to 25% as we have highlighted earlier also in this webinar.
Thank you, Karan. Again, the next question is for you. What is your view on M&M, Tata Motors, and JK Cement?
M&M, Tata Motors, and third stock was?
Cement.
Okay. So regarding M&M, I think M&M is trading below its all moving averages like 50, 100, and 200 day. And moreover, if we view on the weekly chart, we have seen one of the sharpest correction in the stock of M&M in terms of price and time correction also. In just around about 2.5, 3 weeks, we have seen correction of nearly it is of 21%, which is one of the sharpest correction after the March fall, which we have seen in 2020 years. And currently, it is rightly placed at 200-day weekly moving average support. So if it manages to hold the levels of 680, 690, definitely one can start investing in bits and pieces. But if it is closing on below 680 level on the weekly chart, then I think we are heading towards the level of 630, where the next support is of 630, 630 and 610. So around that level, we can start accumulating. And regarding Tata Motors, so Tata Motors is rightly taking support at the 50 weekly moving average at current point of time, and I think 380 is a very good support to start accumulating this stock. And JK Cement. So the structure of the JK Cement is not quite attractive at the current point of time, and I think that there is still room for some correction till levels of 2200. So I would be saying that it is better to wait and watch on the sidelines for JK Cement.
Thank you, Karan. The next question is for you, Sharon. He wants to know your views on three stocks, that is Tirumalai Chemicals, BKT, and Eicher Motors.
I'm sorry, what was the second and third ones?
Second was BKT and Eicher Motors.
Okay, we don't have a view, I guess, on Tirumalai Chemicals and PKT. We're not, you don't have that under active coverage from a fundamental standpoint. Eicher Motors, we definitely think that, again, it's been caught up in the sell-off because it's likely that the auto sector is under severe pressure and all that, but they clearly have very high quality products, and another 5 or 10% down from here, we would definitely consider it for investment purposes.
Thank you, Sharon. The next question is for you, Karan. He wants to know your views on Hindalco, Nalco, and Tata Steel.
So the chart of Hindalco is looking very attractive at current point of time, and I think the target on the upside for Hindalco would be 650, 655. Again, Nalco regarding National Aluminium. I think 130 is a very stiff resistance for national aluminium. Once it get past the level of 130, 131, we can see a levels of 145 in the short to medium term on national aluminium. But the trend is up, and if anyone wants to accumulate this stock, they can do on dips around levels of 120 and 115, anywhere between 120 to 115. It's a very good level for accumulation. And regarding Tata Steel, Tata Steel has a resistance in the range of 1320 to 1350. Unless it get past a bit about this level, I think fresh purchases should be avoided in Tata Steel. Once it get past 1320 and 50 levels on the closing basis, we think the target of 1480 to 1500 is quite possible in the medium term for Tata Steel.
Thank you, Karan. The next question is for you, Sharan. He has bought JK Tire and Man Industries. So he is asking whether he can add more of those.
So again, Man Industries we don't have coverage of, but JK Tires, again, obviously because of these raw material input cost pressures, there are some concerns. But if it continues to decline from here, from obviously 3 year, 4 year kind of perspective, it would definitely be worth investing more into JK Tire.
Thank you, Sharan. The next question is as well for you. Uh, he wants to know how crude impacts Reliance Industries.
So obviously, Reliance, their refining margins are actually positively affected by, by crude prices, right? They have obviously a refining facility as well as obviously, but some other downstream chemical, chemical manufacturing setup is obviously somewhat negatively impacted because there might be some impact on the demand if the prices go up a lot, basically. Yeah. So overall, we would say it is a net negative for Reliance, and is not the same as, let's say, an ONGC or an Oil India, which will benefit from higher crude prices. Excuse me. Yeah.
Thank you, Sharan. Even the next question is for you. He has already bought Lux Industries and Dr. Lal Pathlab, and the prices have now dropped a lot. So he is asking whether he should hold or he should sell.
So Lux Industries, we were recommending it under one of our products, but we've actually removed it because there were some insider trading issues. So we would recommend you exit Lux Industries. What was the second company again?
Dr. Lal Pathlab.
Yeah, so Lal Path Labs is something that we think you can hold from the long-term perspective. While obviously the stock price is again corrected because of these high valuations and such, the business is fundamentally good, so you can hold it from a long-term perspective.
Thank you, Sharan. And the next question is for you as well. Can we expect PE compression in the next 12 to 18 months?
We think PE compression is already underway, but we don't think that it's going to be very significant. It's going to be more probably in the form of a sideways market in the coming months. So obviously earnings will continue to increase, and PEs might compress, albeit at a small level. So that is the thinking from the PE compression from a 12 to 18-month perspective.
Thank you, Sharan. The next question is for you, Karan. At the current price, is Jubilant Foods a good buy?
At current levels,
Yeah, is Jubilant Foods a good buy?
Yeah, at current levels, one can add Jubilant Food with the stop loss of 2400, 2440.
Thank you, Karan. Uh, and we are now, short of time, so we would be taking only few more questions. So the next question is for you, Sharon. He wants to know the future growth prospects of hospital stocks like, say, Narayana Hrudayalaya, Fortis Healthcare, Max Healthcare, and Astra DL Healthcare. So, what is your take on this?
So we are quite positive on the hospital sector from a long-term standpoint. I mean, obviously they were having issues, in the early part of the pandemic because a lot of their capacity was being taken up by COVID-related treatments. Now that normal business activity has started for them in terms of in terms of taking up the other procedures and all that. We do like these companies as a sector.
Thank you, Sharon. The next question is for you uh, as well. What are your thoughts on PI industries?
So we think that again PI Industries is obviously an interesting story from a long term perspective. They're also going to have some challenges from from a short term perspective. Most of manufacturing companies will have some challenges. We think in the next 1 to 2 quarters, that is the March and maybe June quarter as well in terms of the margins because their input raw material costs are rising at a pretty rapid rate and they're not able to pass this along. So we definitely think that it's a good time to be possibly accumulating these stocks with a long-term perspective. Stocks like a PI Industries, yeah.
Thank you, Sharon. And we will take up the last question. He wants to know your view on Bank of Baroda, Sharon.
Yeah, so Bank of Baroda again, it was been really hit badly because the earnings have been very good. The December quarter results were very good in terms of improving the financial performance on the profitability as well as reducing NPAs and all that. But the stock is now available at reasonable prices once again, and it can be considered for for some investment.
Thank you, Sharon. I guess we are now being ending this session. I would like to thank you all the attendees to be such an interactive crowd. And I would also like to thank our experts, Sharon and Karan, who answered a lot of questions and also provided market insights. So yeah, we'll be again back with such a session soon. So yeah, thank you all for joining this session.
Thank you, everyone.
Thank you, everyone. Bye.